So if you're going to remove the stop loss and you're just going to use a hedging approach, you can get a lot out of indice markets. If you're looking at the SPX 500, it can be quite easy and predictable. We know for a long time there's been a perma-bull sort of stance where you've gone up and up and up for a long period of time. If you want to short that without a stop loss and collect the swap along the way, essentially you're going to have to make use of your hedging opportunities when they do arise. Of course, there isn't always going to be a perma-bull market. At some point, that market is going to fall, and for many years, you get lots of ebb and flow either way. But this is how you would handle the SPX in a safe manner. So one where you're not getting massive drawdown, and you can still accumulate decent gains as we commonly post. Don't forget, if you want to learn how to do this, just jump under the video. Every single video I post, I'm always in net gains. You can see every single time I'm trading, it's with ease. I'm not panicking, it doesn't take me long. I just take entries short, long, in and out of the market, and overall we're always on the net green side. Let's jump into it. Next video, we'll add our MAs as always. Typically I use 4 of them just to measure the market value at any time. So how good is the deal I'm getting? Am I taking a high price, a low price? Obviously relative to the time frame we're looking at. Because you could be hitting a early MA on a low time frame and it still be a high price, but an early MA on a higher time frame may not be the same. So I'll make the different colors so they're clear. And if anyone asks, why I've got them, that's the reason. I just want to know how good the deal is I'm getting. So I'll change this so it's a bit faster. My max size, I think we go for contracts on the TradingView setup. I don't normally trade directly via TradingView. It's normally MT4, so it's not entirely unfamiliar, but there you go. The pull off the top is about $45. So I'm going to create, if you like, a volume of half of what would be a max size of 10. So there's 5 in play there. So any push, I can kill that for gains. Take 1 off, take 2 off, and there's 2 profits right there. I'll take a short, that is 6, because we're still very high up in the grand scheme. So I wouldn't really want to buy a lot there, but I'd be happy to take decent shorts there and see what we get. Any further push, and I can just add a bit more to create what would be then an overall max size. So I want to see a push either way. Doesn't matter what way it is. As you know, with our hedging method, every single video we're ending in net gains. Don't forget, if you want to learn how to do that, doesn't matter what the asset is, when, where, how, you can do it as long as you have controlled risk. And the sizes I'm taking are in line with the equity we started with. Obviously, you could change those based on your risk appetite and your skill level. But nonetheless, if you want to learn, just go underneath this video. So I'm going to hedge 3, which is going to be half of that overall 6 exposure. So any pop will allow me to take some gains. You can see the fall has actually created a decent drop there. And effectively then that short had hedged the former long. So I can take another long. I've got no short entries. I tried to pause it there and take those off, which didn't work. Anyway, it won't matter. So I'll take a long down there. I'll kill that for gains. I'll take a short. Okay, so 1/3 of max size again, just keeping it light until we get higher. Take that long off because it's just in net positive. Take another short. And we'll see where we get with this. Okay, so I don't want to have that long there again because our price is very high over this time period or relative to the time frame we're looking at. And I'll just add another short. So I've got 9 in play there. I can take a small amount of gains there. I can add a long to hedge. So 3 hedging the 2 frees I've got, or the total 6. And as I say, in many cases, it's not random, these entries. I've just trained for a long time. So I'm very well equipped for identifying what is likely in terms of price action areas based on various factors, mostly your MAs and price action overall, because price action is more or less going to rule where markets go because they move from level to level. So you can see my earliest 20 and the 40 are sitting there, and then there's a bunch of support all the way along. So I know that's a long. I know it's a 3 out of 10 long if I had to score it and similarly put a size on it because the market is still high overall. If you look at the long term, that's where we are. It's not low down at all. So I'll play it through and I'll kill that for gains. So I'm out of that long for gains. And I can actually just take another light short, but I'm going to go for 4. And those 2 3s and that 4 are going to make 10 overall. So any push now a bit lower. I'm not really concerned with the 20 and the 40 because I'm looking for a longer term move. And if we continue up here, I'll accumulate drawdowns. So what I can do is I can take an active protective hedge. So I can take a long on that support. And if we keep going up, I'll be out for hedge gains. If we keep going down, I'll be out for normal gains like that. So that could be removed. And I can add another long. And if we pop here, I can kill it. So I'm now hedged 100%. Doesn't matter where the market goes. And I can just add and remove and add and remove and add and remove at my leisure. So I can close that one again for more gains. And you can see the equity safely rises at these sizes. Like I said, if you wanted more risk, okay, you would have to deal with a larger amount of drawdown. Your profits may go up at the end of the day, but obviously your drawdown is just going to be larger because the sizes you're taking are larger as well. So because this entry is a little bit further away from the first 2, I'm just going to add 6 more so you can see that. And if we keep going up, I can plan hedges on any falls. So if the market is going to dip back nearer those local MAs, I can hedge. And at this point, you can see what we're now getting is a dip into negative equity on where we started, which is going to give us a good opportunity to look at how you would hedge your way out of this situation. And again, as every video, end out in net gains. So I've got 6. Okay, I'll just show you. I've got 6 overall here in terms of my exposure. Okay, so 6 to the short side. And I can decide really, do I want to add any more short? Now, because I've got such a small size compared to my equity, I've got the means to do that. I can add another 5, you can see, like this overall. Okay, and even if the market keeps going up, I'm still not going to be in a terrible situation. So there's a small fall there. It's not really appetizing. I want something a bit larger because the market's gone up for a long time. I can kill that off quite safely. I'll get $94.39. You can see I set the percentage to close at 100%. And we're coming nearer this MA. So I want to actually just hedge about a quarter of that exposure, just in case we keep going up, which we did. So I can close that. Doesn't seem like a lot, but if you keep closing those entries, even at a lower amount, you will ultimately end up with something very decent to use to remove any losses you're building. So if we keep going away, again, I can take a light hedge long just in case we pop. Okay. And like I said, I mean, even if it was $30, $50, it's still going to add up to protect over time. I really want to keep my equity in a sustainable area. So somewhere that is not going to be existential by any means, because if you look at the drawdown now, it's only 1.5%. It's absolutely minimal. I have no reason to panic, and I can easily just keep hedging. So I'm going to take 4 now on this fall. And I think I oversized that a bit, to be honest. I'll drop that down to 2. And any further fall, I can look for another long. So there's a bit there, gains. And we'll just see where we start to end up. Okay, so that's a better fall now. That is $30 off the top. So I can take another long of 3. Nice move, $57. And I can kill that. I can add another short. So with 15 net exposure to the short side. And my job really now is to not add. I'm not going to add any more shorts because the market has moved considerably. And I'm only going to look to the long side. So I'm long. And nice fall there, breaks way for another long. Okay, I'm still going quite light with the size overall. So really falling now a bit more. So I'm actually going to kill that and just add a little bit more short. And at this point, I can kill that one off. Okay, so I'm going to use some of the hedge gains I've got already, just because the market looks like, it has a reasonable likelihood of turning. It hasn't yet, but I can always hedge long on any considerable fall again. So let's have a look where we get. Any real pullback I can hedge. Still under 2% drawdown. We're going further and further away, but the drawdown is absolutely not affecting me whatsoever. I really don't need to worry about it. I just need to play the game, basically. There's $30. Okay. And on a larger fall, we can hedge again. And there's a bit more. Long side exposure. On a better push down, we can add some more. Okay, so something like that, I can add another 3. And I'm going to slowly flip my exposure now to the long side. So good push there, 65 there, 8 there. Don't really want to add anything short. Okay, I will now. I'll add 5. I'm just spacing things out. I'm just going to take early gains there and protect, tighten up a bit. And you'll notice, again, as always, it doesn't matter how far away this goes. I'm always well in control. Because the sizes are sensible and the hedge areas are sensible as well. Okay, so a good push here is going to allow me to add another 3. Okay, and on a push up again, I can remove that. So I'm really picking up gains to protect my former entries quite easily. Any further push again, I can add the same, just to see if we can collect some more hedge gains. And I got a decent amount out of that move. And anything much lower now, I can look to start to remove these entries and just completely flip to the long side, overall. So I'm going to take out that one. I'm going to add another short. I don't want to go heavy on adding anything more short-wise because I've already got a bit of exposure and a bit of drawdown there. I'll kill that one off for gains. I'll take a long there. And any push higher, nice push there. I can kill that again. So I'm getting a lot of nice hedge gains here. I've got 3, 3, 9, 14. So again, do I really want to desperately add anything? No. I'm trying to probably spread 10 at every 120 points or so. So there's no need for me to add, desperately at all. So I can kill that for gains. I've got a nice fall here I can take a long on. Okay. So I've spread my entries out very well there. I can kill that. So you can see these shorts are now getting moved completely. So my job now is to make a decision. Now, I don't want any old positions left. You can now see we're now in net gain. So even if I closed everything, we would be fine. But overall, it's probably going to be more feasible for me to close these shorts, or at least one of them. Now, the market might just keep going to the downside. But what I can do is I can move a bit of short exposure higher up. Okay, and take a bit there. So I've already recovered a third of that loss I took. We've got a fall off from 2021 to 1885 and an exposure now in play. That is fairly in line with that, but I will just add a little bit more to the long side just in case. So any pop there, which I just missed, unfortunately, and missed the short there. I would have liked that. Okay, there we go. And now we basically swap from being net short in loss to net long in loss. But you can see now we're at a much better stage because the market or our equity overall is far more sustainable than it was before because we've made all those gains. Okay, so that's why this works so well, because now my job simply is to protect myself. And if we keep coming up, just remove those longs. Okay. And just start to add more shorts as the market rises and we get nearer those key MAs overall. Okay, so the nearer I get back to my 20 now, I know the more reasonable the price is going to become. So I can add a bit long there. Nice push up again, and you can see now we're getting well into gains here, despite that move that put us 2% in drawdown, so nothing major whatsoever, but only because the sizes were sensible, the rate at which I was adding was sensible, and I didn't go crazy. And again, now we pushed up, I've got the chance to remove that long, which I'm out of now. Okay, and we can see where we get. So a nice pull down here. I can actually add the long lower now, and we're almost $1,000 up. And I can kill that. I can add a short, and now I've got way more freedom, you can see, to do anything overall. And I can overall just take this one out. So there we are. We're now net out of all those longs, and there's only shorts left. And again, I can start to look at adding those in. I don't want to add anything just yet. And now again, my job would be to hedge these shorts I've got. So I want to buy dips, basically. I missed one there, but on a larger fall, I can start to look long. And basically, it's just a process of doing this over and over and over again. And then at some point, you would just exit everything for gains when it's best to do so. Obviously, it's not best to exit the shorts now because the market has traveled the furthest away. Note as well, I'm still in net gains. I still am not in a loss despite this. Okay, there's no real pullback, but we can go all day. I'm in a 0.1% drawdown. It's not worrying me at all. So any real push, something like that, and I can just tentatively sort of take a hedge. In fact, what I'll do is I'll take a larger short because that is essentially some entry confirmation, but I'm now looking for a longer term swing to the short side. Okay, so that might have been an ideal light hedge, but not by a long way. But any serious fall now, I can exit something larger because I've got the means to hold. I've got the means to hold this because I've taken so many gains already. So I can kill that, and then I can now flip long, okay, and start to hedge those shorts. All right, so didn't get the chance twice to exit that because I'm too slow. Kill that. Do I want to add? Yes, I'll add a bit short. And then any fall, we can look to wind down. Okay, we didn't get that. So we've now gone 200 points, and we've now got two max sizes in play, which is fairly accurate, to be honest, and exactly where we want to be. Only slightly in drawdown now, so I've got the means again to let this drop a bit. Kill that one off for gains. Add another long. Okay. And another fall there, just get rid of that. Add another long. So we've got two hedges in long there to protect. And protect it will. $150 odd there, which if you add these up, is a decent chunk, to be honest, out of that overall exposure. I'll now add a short. And there's a good push there, another $150 again. It adds in to remove the amount we're down. Add a long. And the max drawdown we've ever had is 2%. So remember when I said you could change your size or take more entries perhaps, you absolutely can. I'm going to add two of these, three, so I don't have to keep changing the number. Any push up and I'll kill the long. If I can pause it in time, which I just missed a bunch of gains, I'll take a long now then. May as well have left it. Kill that for $60. Okay. And we are excluding swaps here as well, which typically, on a, like now, if you're looking at your SPX, you'd be getting paid reasonably. Kill that one off. Any larger push up, and I'll kill that long. Thank you, gains. Two of these threes again, short. And I'll hedge a fall now, I think, because I've got some short side exposure. Okay, so kill that off. Balance now, you can see, getting more into P&L. And on a larger swing to the downside, we'll probably collect most of the gains and probably end the cycle and the video. So once we've fallen lower, we'll have the chance to exit all of this. And like I said, this is a very risk-averse format. If you wanted to take a higher size and have more gains, I've sat here with a with like a 2% drawdown, which is just stupidly small, but it's very low risk compared to the amount of gains we've now taken. So basically I've been able to relax. I'm still in net gains overall no matter where we go. Okay, I'll just take another hedge to protect in case. Nice fall. I'll take another hedge to protect in case. Nice gains. And then on a further fall, we probably could have killed some short exposure. That's what I'll do if we get much lower. Okay, so I'll buy another bit. Kill that. So hedge gain there. And on a bigger fall, another one. Another one. Kill that for gains. Kill that for gains. Short exposure, 3, 7, 10, 16. That's 16 over almost $300. So I've got the means to add another short, I would say. And I probably could have been adding more and more, but like I said, I'm trying to keep this video as simple for newbies because I don't want people to panic if they see drawdown, which typically is going to be higher the more risk I take on, which is acceptable if you've got the skills, obviously, which is why I keep saying, if you wanted to trade larger or trade more often, mostly with a higher volume, then that would be fine, but I'm trying to show everyone how to keep a 2% max drawdown, even though you're moving hundreds of points away from your original starting point. But for a lot of people, that's more relaxing, particularly if they're new and they don't really know what they're doing. They want low drawdown. They don't want to sit there with 20 grand just loading up in drawdown. And some people do come to us with that and expect to be happy, and it's just stupid. It's no point. Okay, so another $100 there in hedge gains. I'll add something a bit more aggressive as we close a bit, just to show the other side of risk. Okay, so nice drop there, $140. Okay, are we out? Yep, we're out. I'll now take a fall along there. Okay, nice close there, decent gains. I'll take the same 7 as before. And a lot of movement now. Anything considerably further down, I'll kill like that. Great. I'll take a 5 lot. And we're now coming finally lower. Okay, so I don't really want to wash anything off until we get much lower than this. So I'm happy to trade this move or these moves. Probably could have shorted a bunch of times, but I'm just trying to wind this down now so we can end the video, which is going to be better done at a more profitable point, i.e. when the market gets a larger swing. Okay, so kill that. And I can add another hedge long. I mean, even if I did close everything out anyway, I'd still be in gains. Because you can see I'm almost 2 grand up, despite having all of this out the money. If I wanted to, I could close that. And because it's an index market, I think I probably will. So I'll take a loss on that. That's fine. But like I said, we're still well in gains overall. So I'll keep playing through now and I'll add another long. Okay, so some nice rallies here. Gains and gains. Add 6 short. And see where we get. So another fall, that's gains again. Add 4 long. And that's gains there. And we can just keep doing this all day. And because I'm taking both sides constantly, I don't need to worry about being stopped out. Now, essentially, we'll probably end up just taking away everything we already have in loss. So essentially now, if I wanted to, I could, just completely close everything. I could pull that off Okay, so now this is what we're sat with, and I'm still up considerably overall. If I want to just add another hedge long, okay, nice pull there, gets me a bit more. Add a couple of these short, and good fall there. So there's one there, two, add another hedge long, and there we go. Really nice fall. I can kill that. I can kill that. I can kill that. Kill that. And like I said, that. And we're still up $2,685. So like I said, every single video net gains. It doesn't matter where you go. That was a very risk averse scenario. So I only had a max drawdown of like 2%, but I'm creating this. Okay, so it's a long period of time, yes, but it was with very low risk. I hardly had any drawdowns. So if you wanted to put the size up, you could have. If you wanted to take more trades, you could have. You would have made a higher P&L. But like I said, for anyone who's a newbie watching this, it's going to be difficult for them to understand. So there's a very risk-averse format. 2% drawdown, 2.6% gains. There's no way you're going to bust trading like that. But it's easily done. You can see the win rate. It's normally in here. Well, it was high. But you can see the greens. If you look at the greens, you're up every month pretty much. Okay. So yeah, that's really how it goes. Thanks for watching. If you want to learn to do this on a diverse portfolio and have a low drawdown whilst as we do accumulating gains, go underneath. See you in the next one.